Hello and welcome to the Bitcoin Butlers podcast. I am Mike Watkins, and with me, as always, is my good friend and business partner, Matt Burke.
Hello.
So, Voyager Digital filed for bankruptcy this week, and we thought this would be a good time to discuss some of the meltdown that has been going on in the crypto space that has affected the price of Bitcoin, and also a good time to discuss the difference between Bitcoin and crypto. So, Voyager Digital filing for bankruptcy is very big news. Matt, what is your understanding of this Voyager situation?
Well, the short answer is that it's just another one of these crypto lending platforms that has seemed to have not been able to withstand this latest drawdown. And Voyager had a tremendous amount of money owed to it from Three Arrows Capital. I think they had about 300 million, like 15,000 plus Bitcoin, plus another 350 million worth of stable coins that they had borrowed from Voyager. And after not repaying in a timely manner, Voyager issued them a default notice on their loan, and it doesn't look like they're going to collect that. So it's just another one of these. When you go back a couple months, and we saw this with Terra and Luna. We've seen Celsius have issues, and this is just another one of these dominoes that continues to fall in that space because people are chasing yield that may not be realistic.
Well, I think anytime you see yields of 10%, 18%, 20%, you have to start digging a little bit and trying to find out why are they offering and how are they able to offer such a high yield. And I think I think something that got people kind of twisted was that a lot of people felt this was like a low risk, even a no risk type of investment.
Right. And when you look at any type of return on an investment, um, inevitably, if it's a legitimate investment, you're going to see and kind of that risk return relationship there. You're not going to get a higher return unless you're taking more risk. So the higher
Mhm.
the return, typically the riskier the investment. And so when you see these yields, double digit yields being offered to investors for what's essentially the equivalent of a cash deposit in the
Mhm.
form of a stable coin. You
Mhm.
really have to ask yourself, why are they able to do this? And what we've seen here is that you've got all of these players that are kind of kicking the can to one another in a way.
Mhm.
They'll offer yield on one thing, and then they'll take that money and they'll loan it out to someone else, and that person will pay yield. So you've got all of this kind of rehypothecation of these loans kind of going around in a bit of an incestuous circle. And so that's by its nature kind of scammy, and is going to result in some people losing their money in that case.
Well, I think it's resulted in a lot of people losing their money, and I'll be honest, I haven't personally dug very deep into any of this stuff because when I looked into it, even initially, it was just screaming scam to me. There's just no way to make these kind of returns. And to be honest, if you could make a 20% return every year, sort of guaranteed with very low risk, you really wouldn't have much need to do much else. I mean, that's a spectacular return. It's almost double the Nasdaq for the past 10 years or so. Certainly about double the S&P. And you have to ask yourself, how are they able to do this? And the answer is they weren't able to do it for very long. They're able
Right.
to.
It's a matter of time. They can do it because you have the money coming in, and then you can pay out
Mhm,
yield for some period of time. But eventually, it catches up, and you can't kick the can forever.
mhm. Well, the focus of what we do is Bitcoin. I think now would be a good time for us to get into the difference between Bitcoin and everything that's not Bitcoin. And I'll just use a term, I guess, crypto for everything that's not Bitcoin, because inevitably, when you have a conversation with someone about Bitcoin, you say something about Bitcoin with someone you may or may not know, they will always bring up some other random coin. It's
Sure.
almost a guarantee. Like there's Bitcoin, but there's this other thing. And in reality, not investment advice in any way. We have to say that we do not give out investment advice. But in reality, Bitcoin is unique amongst the 20,000 plus coins. There's nothing else that's like Bitcoin. Not even close.
Absolutely. Yeah, and Bitcoin is really the only one that you could consider to be a commodity, compared to these other coins out there. I think a
Mhm.
lot of these coins are really nothing more than unregistered securities in a way. They are a piece of a technological platform that, um, may claim to be decentralized, may claim to have some of the characteristics that Bitcoin has, but when it comes down to it, they're really not the same. And the difference is that there's two things that I see, that really differentiate Bitcoin. Um, the first one is the the fact that it's got, I mean, it's the first. It is the first of all of the cryptocurrencies. It
Mhm.
laid the groundwork. Most of these coins in some way are, you know, the code that they run on is very much, based on Bitcoin for a lot of these. We know that's certainly the case with Ethereum, and most of these tokens are Ethereum based. So
Mhm.
you've got, kind of an adaptation of the original Bitcoin code, but what you don't have with those is the world's most powerful computer network securing it. And so the
Mhm.
network is what creates a lot of the value. But then when you, layer on the proof of work consensus mechanism and the difficulty adjustment, it really makes it an entirely different asset than any of these others, because with such great, accuracy, what the issuance schedule is for Bitcoin. And
Mhm.
that, even though, it may not always be every 10 minutes, over time, every 10 minutes, a new block is going to close, and it's going to be, validated by the network, and it's going to be placed into a block, you know, eh, with proof of work attached to it. And whichever chain
Mhm.
has the most proof of work is the one that's valid. And so it makes it very, very difficult to change any transaction within the Bitcoin ledger. Whereas with a lot of these other coins, you can roll back the ledger if you want to. You can't do that with Bitcoin. And so we've seen it happen. We've seen it happen with Ethereum. There
Mhm.
was an instance where there was a bug in the software and someone exploited it, and some programmers said, "Up, nope, do over," and they rolled it back as if it never happened and fixed the code, and and they erased those transactions. Well, some people might say, "Oh, that's a good thing because you stop people from getting hurt," but the reality is that that's not a decentralized form of money, or decentralized, network. That is,
Mhm.
the absolute ability to change the uh, the history of the database, more or less at will. And so all of these
Mhm.
allow you to do that. The issuance schedule is, we don't know with a lot of these how many, tokens there will ever be. We don't know how many were mined before, they kind of went public. So how, what, what stakeholders are there that are holding these huge quantities of coins. And then with a lot of these, when you get into the proof of stake consensus, really all you have is nothing different than the existing monetary system, where the ones that have the most, uh, assets make the rules.
Mhm. I mean, when you look into Bitcoin, you really start to understand it. It's I think personally, it's just quite a marvel just to think through all the parts that are there and see how they all work together and the genius of Bitcoin. And then when you see the other things in the crypto market, they're all just cheap knockoffs, cheap replicas that don't have any of the essence of Bitcoin. Like they look and run sort of like Bitcoin, but the fact that I don't really think that any of them are truly decentralized. There may be some decentralization to some of them, but Bitcoin is the only thing that's truly decentralized and also does not have a board of directors or a CEO or anybody that's really a one person or one group that's determining the direction of it and the course of it. It's really autonomous in many ways, even though there are I don't know, hundreds of thousands, if not millions of computers supporting this network.
That's right. I think that over time, I think more people will come to understand the difference. And I think that when you even see a lot of the regulations that are being proposed around all of this, you can kind of see some of those differences being highlighted where, um, most recently we saw with the proposed legislation from Senators Lummis and Gillibrand that
Mhm.
they're looking to have the commodities board regulate Bitcoin, which tells you something because they're not saying that Ethereum or Solana or Cardano or any of these other coins that have some following are commodities.
Yeah, I don't know what the government is really gonna what the governments around the world are really gonna do with Bitcoin because there's really not much they can do to stop it. And when I say stop it, I don't mean that they can't curtail some of the use in their countries, they can't make things difficult. I mean, they are not going to stop Bitcoin from running. No
No.
one's gonna stop Bitcoin from running. We heard something from a good friend of ours who helped me conceptualize this and just said that every 10 minutes, Bitcoin is going to come along and put down another block, and there's nothing you or anyone else can do to stop it.
That's right.
And when you realize that you have this machine that is sort of kept alive, it incentivizes humans to keep it alive with monetary rewards. And in many situations, there are significant monetary rewards. So people spend, oh, I mean, billions of dollars with these, the amount of money spent on Bitcoin miners worldwide right now is billions of dollars. And in the future, probably be even more. And you also have Intel making chips now for Bitcoin mining. I believe Samsung just came out
Samsung
with.
just announced,
Mm-hmm,
yep, they're going to be
mm-hmm,
making a chip that is supposedly extremely efficient and you know not as much of a power hog as some of these other
mm-hmm,
ASIC chips. But yeah,
mm-hmm,
you're going to see major chip makers uh, coming up with ways to make Bitcoin mining more efficient because
mm-hmm.
ultimately the goal of Bitcoin mining is going to be profitability. And so if you can have a more efficient chip, if you can have cheaper energy, if you can have otherwise wasted energy, if you can make deals with electric companies to help support their grid by buying the excess power at cheap prices, all of these things are going to continue to help Bitcoin evolve and in my opinion can really do some amazing things for society just in terms um, of energy and the ability to transfer value instantly.
Yeah, it's funny that we both have similar thoughts on the Bitcoin energy thing. So the FUD around Bitcoin energy is that Bitcoin's an energy hog and Bitcoin's going to boil the oceans and Bitcoin's bad for the power grid, et cetera, et cetera. In reality, it's the opposite. And we went over that in one of the earlier episodes, but the more you understand it, the more remarkable it is that almost everything you read is not true or hasn't been well thought out or just simply garbage intended to misdirect you and mislead you. And I was reading something earlier today about the Texas power grid,
Mhm.
how the miners there are buying the excess, but when the grid needs power, the miners just shut down.
Right, they have agreements in place that just say,
Hmm.
okay. And the interesting thing that and I'm really fascinated by this whole
Mm,
dynamic, and
mm.
and it
It
took
is interesting for
and
sure.
it took me a little while to kind of understand that the facts around power companies have to be built around peak usage.
Hmm.
Because if demand goes up, you have to have the energy available for the consumer. And so, if you've got an average amount of usage, which is less than the peak amount of usage, as it always would be, your average will always be less than your max.
Mm,
Um, then, if you're able to sell off the difference between the average and the peak, but use it when you need it, you've got a really kind of symbiotic relationship there between the miners and the
mm,
power companies and the consumers because now your allowing the grid to be more stable because they're generating more energy, and a piece of that's getting scooped up by the Bitcoin miners. But if demand increases, the energy companies just say, "Hey, per our agreement, we're going to raise the price of this amount of energy, and you need to shut down." And that is good for everybody because the Bitcoin miners aren't going to pay, they don't want to pay
Mhm.
more for the energy. They'd rather just not mine the coins if it's going to be unprofitable. So it's one of those situations where you're better off doing nothing than mining at a loss, or at a lower profit. So they'll just kind of
Mhm.
hit the pause button, let the energy companies sell off what they need to meet the peak demands. And then when that demand subsides, they'll say, okay, you can power back up. And so it's a
Mhm.
really kind of elegant way to keep that in check.
So here's something I didn't understand that hopefully would be of value to our listeners, and correct me if I'm getting any part of this wrong. So a power company can't just increase or decrease how much power they're making with like the flip of a switch. They
Correct.
want they want to it I don't know the details of how that works, but I just know that it's just not something where there's a dial that say, okay, we need more energy, just, turn it up to
Crank
11,
it up, right?
right? So the way it works is like, let's just say that the max, we're just going to use fake numbers here to keep the math easy. The max that your uh, power center can generate is about 1,000 watts. Your power plant can generate, let's just say, about 1,000 watts an hour. But the demand for the area that you supply that power to, and let's keep in mind that electricity doesn't move across the country. It's fairly local. Like electricity can only move. I don't know how many miles
So
it
far,
is.
yeah.
Yeah, it
It
might be
starts to
max like 500
dissipate.
miles, right?
Yeah, you can't really store it or transport it very
Right.
effectively.
And that's the thing to keep in mind is that you can't really store it or transport it very effectively unless you're using batteries. It's not like these power plants just have a way to keep an inventory of excess power there. They basically it's use it or lose it. And a lot of them lose it. A lot of it just gets just converted into heat.
Mhm.
So what the Bitcoin miners are doing, they're saying, okay, your normal usage is 800 watts an hour, and your power plant is producing 1,000 watts per hour. We will take that extra 200 watts per hour and we'll use it, and we're going to pay you for it. But if you ever need more, if you ever need to go up to 1,000, we will just simply shut down our machines for you for your peak. And then when the peak is over, we will pick up the extra leftover, whatever that may be.
Yep.
Is that about right?
It's about right.
Mhm.
And so, and a couple other things that this does, and look, this is assuming that the miners are the ones that are doing this work. I could see a case, down the road where you see the power companies themselves starting to mine Bitcoin. Um, but either way, um, whatever extra revenue is generated by those power companies, it is excess profit for them, but it's also working capital and the ability to take that money. So if you can only sell 800 watts on average, and now all of a sudden you're able to sell 1,000 watts consistently, you've just increased your revenue by some percentage. And it won't be, it's not linear because you're going to sell that last 200 at a
Mhm.
lower price, but you still have revenue that you wouldn't have otherwise had. So now you can take that money and reinvest it into your own infrastructure. You can actually improve. I mean, we've got issues in this country with the power grid. We know that
Mhm.
a lot of really high population areas and high demand areas, they face rolling blackouts, brownouts, all kinds of
Mhm.
issues, where they're scrambling in some cases. We've seen it in Texas, we've seen it in California. But if by generating this extra revenue, they now have the ability to make more capital investment into their own infrastructure and make their own operations more efficient, it could kind of boost the entire industry.
Mhm. And also for the community, there's a boost for the community because you can now have a larger power plant. You can have a power plant that can operate at its max, or it's whatever the most efficient, most cost effective and efficient level is for that power plant. And then there'll be a taker of extra energy. And because as a taker of that extra energy, and because that taker will turn it off when you need it, your community will have extra power when it needs it. So you don't have these rolling blackouts when it's 110 degrees outside, when people need air conditioning most, or when it's negative 10 degrees outside where
Right.
people need heat most, although heat obviously comes from different sources, but it's the same kind of thing. So there's a real benefit to the community there. And that's also something that's unique to Bitcoin, because most of the Ethereum tokens are run in data centers like AWS or Google or Microsoft Azure.
Right. And those are, and when you, even in the ones that are proof of stake, which Ethereum is not yet, but
Mm-hmm.
they say sometime soon, who knows? But any of those uh, altcoins are being run on centralized centralized data centers
Mm-hmm.
that also have a tremendous energy use, even though
Oh.
they're not necessarily spinning numbers to create a proof of work consensus. They're still using plenty of energy. And so, again, I don't, I understand why you hear this environmental, hate against Bitcoin, but the reality is that when you compare that to pretty much any other industry that uses energy, there's really, it's no worse than any of them. In fact, it's better in
With
most cases.
it's better, and actually has positive uses for society, and that's, if we're talking about the differences between Bitcoin and the other ones, I don't think most investors or most people who want to buy Bitcoin really care about the benefit to the community or to the power grid that Bitcoin may have. I think a lot of people might be environmentally conscious, and I know that both of us are big lovers of nature, and want the world to be a very pretty, beautiful place for us to go hiking in and to enjoy. And Bitcoin is a net good in that area. So it's really, it's, I'm not surprised that all the news is wrong, because news is usually pretty wrong about most things. I mean, I would say for most people, there's actually a name for this phenomenon where you read an article about something you really know, and you're like, wow, they got everything wrong in this article. And then you jump to another article and you believe everything that's in that article. And the reality is that the people who are writing these articles don't really know the subject matter. And I know that anytime that I've been part of an article or been quoted, I've been surprised how many times I've been quoted and they get the quote wrong.
Sure.
So, Bitcoin is a net good. It is different than all of the other cryptocurrencies. And what I'm hopeful of during this period is that this shakeout of the crypto market uh, helps people refocus and understand that there really is only one. I understand that some of these projects might be something, and I think this is something I'm stealing from you. I think you told me one time that the all of the altcoins are like penny stocks,
Hmm.
and people aren't really super hyped on investing in a penny stock. They'll buy a piece of junk on the Nasdaq without really thinking about it because their friend told them to. But once you start to hear the word penny stock, then people start to freak out a bit. Like they're not super comfortable with that. And these other coins are really just kind of penny stocks. I mean, you can't have. We have a gold rush going on right now. We'll call it a crypto rush, and there are 20,000 or so other projects that are out there. Realistically, how many great companies did the internet bring us? 15, 20. Most people could probably only name 5 or 6. So, and during I remember the dot-com boom in the late 90s, early 2000s, you knew a lot of these companies, and these companies were listed on Nasdaq, were just going to fail. I mean, it was just,
Sure.
it was kind of a joke, but you never know which ones. I mean, nobody predicted that Amazon would be the monster that it is now. I mean, it was a bookseller.
Right.
I saw something recently. You can buy a pet on Amazon. I didn't look into it, but they're getting, there's very few areas which Amazon is not touching currently, and or have plans to expand into. So no one saw Amazon. You know who a really big player was back then was Yahoo.
Yahoo was, yeah, and that was, pre Google days, and so
Mhm,
I think they were in terms of search, they were certainly
mhm,
the leader for many many years. Um, but yeah, there really were a lot of companies, and I would say in the call it 98 to 2001 timeframe that some of them had huge market caps, some of them had founders and investors who made many many times their money.
mhm.
um, and by around the end of 2001, a huge amount of them were gone. So I think you see some of those similar dynamics here, where you know, there are very few projects that really have the fundamentals to make it in the long term.
And nothing is even close to Bitcoin. So I would say for our listeners that anytime you hear what's the difference between Bitcoin, like why not just get Solana? Solana is like, I don't even know what it is, a couple cents a coin, if that, I don't even know. But whatever someone tells you, maybe you should get. My advice to everyone is I never tell anyone what to buy. I tell everyone to go study Bitcoin. Just go study Bitcoin. Study it. After you study it, you can make a decision on what you'd like to do. And I know when I got into this and I started, while my primary focus was Bitcoin, you still see these other coins that are going up so rapidly. It's just human nature to say,
Sure.
I would like a piece
You
of
want to
that.
jump on
And
that.
I'd like,
Yeah.
yeah, I want to, that's just being intelligent. If you see something that could be beneficial to you. But and I always heard they're all garbage. They're all garbage. Just from the good resources that I was consuming, it was always just it's Bitcoin and everything else is pretty much garbage. And now that time has gone on, and we've seen this thing happen with Voyager and Three Arrows and Celsius and Terra and Anchor and who knows who else. You realize that it was much worse than you really thought it was to begin with. While you thought those other things were penny stocks, people were doing crazy things with them. They were leveraging them, they were lending them. They weren't treating them like they were this crazy speculative, I'll call them penny stocks again, that were just kind of worthless. And then it happens and everything crashes. And
And it happened
unfortunately,
fast. It's
fast. I mean, it happened like it's been a matter of weeks, right?
Yeah.
Just
I mean,
almost everything changed.
as far as Luna and Terra, I mean, that basically went from, you know, Do
That went from
Kwon
them saying they're gonna buy $10
10
billion
billion,
worth of
right.
Bitcoin to being gone in,
Yep.
like, a few weeks, and they pulled down, there were a lot of people. I know Three Arrows supposedly had a lot of Terra.
Couple 100 million they lost in that deal, I
Mhm,
think. Um,
and there's a
yeah.
guy, I believe Mike Novogratz.
Mhm.
He was one of the early Bitcoin guys, and he's got and I might be getting this wrong. I know I'm getting half it right. I think he's got a Bitcoin tattoo on one shoulder and a Luna tattoo.
Luna,
I know he
yeah.
definitely has a Luna tattoo on the other shoulder. So this guy's been around. He was a hedge fund manager. The guy's he's probably in his 60s, I'm guessing. He's been around for 30 to 40 years. And he was such a big believer in Terra that he got a tattoo of that. So anyway, I think it's important that people understand that while they see all these prices going down of all this crypto and they hear about the crypto winter and all this stuff is melting down, a lot of that meltdown was inevitable. Unfortunately, it does affect the price of Bitcoin, although people are able to pick up Bitcoin at a cheaper price. There's a weird thing that if Bitcoin is trading at 60,000 a coin, going to 70,000 a coin, well, let's just say this. Let's just use this thought experiment. If Bitcoin is at 20,000 or so today, and then over the next month, it runs up to 60,000, it triples over the next 30 days. People will be rushing to buy it at 60,000. Be a
Absolutely.
frenzy, a feeding frenzy of 60,000 because it's tripled in a month. However, not that many people are interested in buying it at 20. right? Not that many people are interested in paying one third of what they would pay. Now, there's some other factors in there because obviously, when you see an asset that's moving up very quickly, there's a big FOMO situation there, and
Sure, you can't call the bottom.
no, and unfortunately, while people think that their investment advisors and analysts are really driven by data and logic and thoughtfulness, the reality is that much of that is driven by emotion, even when you're turning
Absolutely.
to professionals for advice.
Yeah, there's a huge psychological factor there, and I think
Mm,
you've seen it, and not just in this market, but in most markets where, when things are running hot, everybody wants to jump on, and when things are pulling back, everyone's like, "Whoa, that's too risky. I'm not touching that." So,
mhm,
and it's just it's an interesting view of human psychology that says that I want to buy something when it's more expensive and I don't want to buy it when it's cheap. Um, is just kind of hard to get your head around, but everybody's been there. It's just,
mm.
that fear takes over and stops you from wanting to buy it, even though, you could argue that it's a good price.
Well, everyone wants to buy something on the way up. People love to buy things on the way up, myself included. No one likes to buy stuff on the way down. And when something's been beaten down, there are very, very few that come along and will buy it. Although we have a friend who picked up uh, AIG, that insurance company.
Hmm.
AIG was trading. This is back. I guess he must have bought it in like 2008 or so. And I know that I think he put like $50,000 into it, and he picked it up. I don't know what it's trading for. It may have been trading for like 50 cents a share,
Hmm.
something like that.
Yeah,
And
it
he
got
told his
killed.
wife, he said, we're either going to lose $50,000 or we're going to do really well. And last I checked, it was trading about 30 or so. So he made like 60x on his money.
Hmm.
And so he saw something that other people didn't see. He's a really smart guy. And he had a conviction and he stuck with it and he waited a number of years. And that's not just hitting a home run. I mean, that's pretty spectacular.
Yeah.
So, all right. Anything else on this?
No, I think that was it. I uh, I realized I did forget to put our Voyager on fire slide up um, before we talked
That's
about
a
it.
good picture. I
I
like
know.
that one. A big pile of
Um,
money. That's kind of what happened. Although it really wasn't a pile of money. It was a pile of fake money that got
right.
burned.
Exactly. So yeah, let's I guess we can jump into some more of the kind of adoption news and
Mm,
that stuff, which we talk about every week. So the next one we had is the Chivo wallet. So the El Salvador um, Bitcoin wallet Chivo had $52 million worth of remittances in the first 5 months of 2022. So January through May of 2022, which I think percentage wise is not a huge percentage of El Salvador's remittances, but depending on which news source you go to for this, it's either viewed as a very good thing or a very bad thing, which I find interesting. You know, the way I look at this is that 52 million in remittances. I don't know what the average remittance size is coming into El Salvador, which I believe most of those remittances are typically coming from the U.S. or
mm,
Mexico, um, or other countries um, where people who live in El Salvador, where their families are working. Um, but I wouldn't imagine that those are particularly large transactions at a given time. So, at a minimum, we're talking about thousands of transactions. I'd say probably many thousands of transactions that have been moved from, places like Western Union or possibly even some other electronic payment platforms, whether that's PayPal or I don't know,
mhm,
Cash App. Um, all of those are still in the mix, but you're seeing a significant amount of these transactions happening in Bitcoin. And I think one thing that I think is really interesting about this $52 million versus all of the rest of the remittances is that, El Salvador is a country where 70% of the people don't have bank accounts.
Mm-hmm.
And
Mm-hmm.
all you need in El Salvador in order to use your Chivo wallet or to transact in Bitcoin or over the Lightning Network, you just need a phone with an internet connection. And where, only 30% of the country of El Salvador has bank accounts, I think it's like 80 to 90 something percent have cell phones. It's a large percentage. The
Mm-hmm.
majority have it. And I think it's interesting that, to note that in order to do this, you don't need a bank. You just need a phone. And, if you're going to use Western Union is different because you can go from one physical location to another to send the money, but you also have to go and you have to wait for it to show up, and it's expensive.
Mm-hmm.
For all of the other ones I mentioned, whether it's PayPal, Venmo, Cash App, all of those, you pretty much need a bank account in order to
Mm-hmm.
utilize it. So
Right.
it's
Right.
not really a solution for the unbanked. And
Mm-hmm.
that's not just an El Salvador comment. I mean, that's just a global comment that
Mm-hmm.
if you are using the Bitcoin network, whether that's over Lightning or actual Bitcoin, if you're using that to transfer value between any 2 points in the world, it's going to be instant, it's going to be almost free, and it's going to be permanent.
Mm-hmm.
No one's going to, you can't bounce a check in Bitcoin. So
Mm-hmm.
I think that's just an interesting piece of it. And I'm curious to see, how this continues to grow and what percentage of their total remittances this ends up being.
Mm-hmm. Yeah. So I think that there are a couple ways. There are a couple things that I glean from this. The first is, and correct my math if you can, if I'm wrong, but I think the average remittance, and I could be wildly off, is probably somewhere between $100 to $250.
Okay.
But let's just say it's $500 per remittance.
Hmm.
Well, 52 million divided by 500,000 is 104,000 transactions.
Your math's right so far.
Okay. So let's just say 100,000 or so transactions in 5 months, right? So
Hmm.
that's 20,000 transactions per month.
Hmm.
That's a lot of transactions for a new technology that these are the early adopters, right? It doesn't matter if all of a sudden El Salvador has this. It's not like they're going to have some kind of bizarre adoption curve where everybody's just using it from day one. You're trying to get a country of, I think the country's got about 4 million people, right?
I think 6 million.
Okay, six or so. But that's a lot of users to get on there. And you have to consider the sophistication of the users. So for older people, let's just say anyone in El Salvador over the age of 70, they probably struggle with this quite a bit.
Hmm.
So you're talking about, but regardless, with all that, you still had some pretty crazy adoption numbers. And I don't think that the number of $500 is exactly right. If the average remittance is, let's say, $250, then you're talking about almost 40,000 transactions a month.
Hmm.
And that to me is a huge success. If you're launching something new and you're getting people to do one of the exercises that requires the most amount of trust, right? Sending money, you don't just trust anyone to send your money. You want to make sure this is actually going to work. So you have to have a pretty good amount of faith in what you're using. So let's say that we have somewhere between 20,000 and 40,000, could even be more than 40,000 for all we know, transactions per month on this new platform. I think that's amazing. I know it's a small percentage of the overall remittances, but what do you expect exactly in year number 1? So I think that's one sign of a huge success, and it also makes me think about the impact that this will have and that Bitcoin will have globally, because we're only talking about, for the most part, we're talking about the US to El Salvador. I bet you
Mhm.
90x% of these remittances are coming from the US to El Salvador. But then we have to start to think about the world a little bit bigger, in that you can use this to send money from any country, from any person to any person. And so you could see quite a bit of remittances that go to families in other countries going worldwide, meaning people in Europe are sending it to someone in Guatemala, someone in Germany is sending this to someone. I'm not even going to use like a necessarily a third world country, but someone in Portugal. That the ability for people just to send payments to who they want to send to, who are not in their jurisdiction, who a lot of times are in another country, is significant. And we could see this really being, I could see us looking back on this in 10 years and saying, remember when we talked about the 52 million in El Salvador?
Right.
That was funny, because now it's just a common thing that nobody really thinks about. And then probably the global amount for half a year is maybe like 500 billion or something, just between people. Who knows? But I think that's an excellent start for El Salvador. And if there are news stories that there's that saying, lies, damn lies, and statistics. You can
Sure.
frame this any way you want to frame it, but if we're being intellectually honest, we have to realize this is a new technology. This is something, like you said before, that helps the unbanked. I don't think people in the US really get that concept of being unbanked, that so many people are disconnected from financial institutions. We don't think about it because we live in a rich country. And you've had a bank account since you were a teenager.
Right.
But there are plenty of adults in El Salvador that do not have a bank account and therefore are excluded from financial technology. So I think that's a great start. I think it's great news. I'd like to see the number higher, of course, but I'm quite impressed with that.
Yeah. And look, I think I heard a podcast recently that said this. I thought it was really a good way to frame it, is that the internet, when it came kind of into existence, was innovative because it allowed you to take any piece of information and send it to anyone.
Hmm.
And Bitcoin is really the same thing, but with value. You can take
Hmm.
monetary value and
Hmm.
send it to anyone in the world, and you can do it instantly and, for all intents and purposes, free.
Hmm. And you can send a smaller amount than you've ever been able to send before. We're going to see just how small as time
Right.
goes on, but I think that's one of the more fascinating parts.
Good. All right. Well, let's go to the next one, which is another Brazilian institution allowing the purchase of Bitcoin for 30 million customers. And I think on our last show, we had Nubank, which has 53 million customers. So now you're talking about, almost 100 million people in Brazil. And I don't know if there's overlap here or whatnot, but still, it's, they got 30 million customers. They're not insignificant, and they're going to allow Bitcoin purchases.
Yeah, I think it's more news for Brazil. Something tells I look, it's all speculation, but I would not be surprised if Bitcoin is the first really big country to have some kind of Bitcoin adoption. Kind of seems like we're trending a bit like that right now. Maybe it's just the news that we're getting over the past few weeks, but that's just a guess.
Well,
Um,
I think any country, and I think Latin America is a good example of this. I think parts of Africa are a good example. You know, there's not much of a middle class in Brazil. There are probably some people who are very well off, and there are many, many people who are more or less in below the
Not well.
poverty line by any
Hmm.
standard. So, I think when you see these types of things rolling out, what opportunities are being created for people who really have no ability to save any money, to now be able to, put a little bit here or there into Bitcoin to maybe actually capture some of that wealth that they've created that otherwise, is going to be inflated away, or not really,
Or stolen.
Yeah.
Yeah.
All right. You want to keep going, or you got anything else
Yeah.
about Brazil?
No, I just think that we're seeing nice adoption there, and we're seeing, I think my comment on this is that because the price of Bitcoin is down from its peak from November 2021, I think there's always a change in sentiment when this happens. And that's fine. There's a change in sentiment on the retail level.
Mhm.
That's one thing. But for these large companies to do this, and I think we're going to get into it in our next story a bit, that a lot of large companies are looking to do this. And when a large company puts something in place, it can take, if they're really, really fast, it'll take months. Let's say 6 months. 6 months would be like incredibly fast for a large company. But a lot of the stuff they do takes years, a year or two, maybe 3 years to implement anything. So I'm not saying it took PicPay 3 years to implement this in Brazil, but I know they've been working on it. Let's say they were certainly working on it last year. And it takes companies a while to build the infrastructure out, to dot their I's and cross their T's, so to speak, and to launch something. So we're going to see more things. I find it interesting to see the things that are launched during this crypto winter, bear market, whatever you want to call it. This has
Mhm.
obviously been on the radar for a while. And there's another thing with this PicPay was that you can use PicPay to pay your bills.
Mhm.
It's a little bit different than a Venmo. So it would allow people in Brazil to pay their bills with Bitcoin. I don't think you're going to see many people doing that, but these adoption stories are significant. And you said, like I said last week, we had Nubank, which was 50 million. There's 30 million. Maybe there is some crossover, but still, you're seeing large swaths of the Brazilian public be able to have access to Bitcoin. And it's
Yeah.
not just Brazil. I mean, there are stories we don't include here every week. I know, like the fifth largest bank in Switzerland is now offering Bitcoin to their customers, and that's not the first bank in Switzerland we've seen doing it. So we're seeing this stuff happen, and we want to see this. We want to see each week after week. We want to see financial institutions all over the world expand the use of this to their customers. We want to see banks doing it. We want to see merchants doing it. And with that, I think it's a great segue into the merchants.
Yeah, really good. All right. So, this is a survey done by BitPay, I believe. Is that right? 85% of merchants see crypto payments as a way to reach new customers. So, what do you know about this
Well,
one?
that's their headline.
Right.
They when you dig into it a little bit, there's some other things in there that I thought were interesting, particularly one that you noticed on this. So I'm gonna let you. I don't want to steal your idea there.
No, that's okay. Yeah. Well, the thing that I thought was the most um, impactful was that the companies that they talk to, the merchants that they're talking to about allowing their customers to pay with cryptocurrency, they're talking about businesses that have annual earnings of over $1 billion. So, these are not startup companies. These are not small
Mhm.
companies. If you're a company that's making over $1 billion a year in profit, you've got some scale. You've got some longevity, most likely. I don't think too many companies are just starting up and kicking off $1 million of profit, $1 billion of profit. I'm sorry,
Mhm.
right away. So these are established companies that have big footprints, and they're seeing the need to allow their customers to pay this way.
Mhm. Yeah, and one of the things I did find in there that I would agree with on their survey is that, and this is kind of a no-brainer, merchants would like to pay the lowest fees possible for payment processing. So if their normal payment processing is, let's just say, 1.5 to 3.5%, and they can come in and get something that's between 0.5% to 1%, uh, that's very attractive to the merchants. That's just money they're putting in their pockets. I mean, they're giving away a lot of times 2% or so to these payment processors.
Yeah, look,
So,
I do consulting in the accounting world, as you know, and um, when I have retail clients that are accepting credit card payments, the merchant fees are going to be almost inevitably, in their top five line items.
mhm,
Obviously, rent and people tend to be your biggest expense line
mhm,
items, aside from the actual cost of your product if you're selling a product. Um, but below the gross profit line, merchant fees are going to be one of the bigger line items. And so, if you could come up with a way, if you're at 1.5 to 3.5%, let's just say you're at an average of 2.5, although
mm,
I think it's typically closer to three
mhm,
when you see those merchant services being paid. But
mhm,
let's say it's 2.5%. If you can get that, even cut in half, if you can take one of the biggest line items on your income statement and cut it in half, that's going to be meaningful to any business.
mhm. Yeah, and there's stuff that the payment processors do where you'll all of the contracts are different, but a lot of times there's gonna be, like, not a percentage transaction fee. There'll be a unit transaction fee and then a percentage transaction fee on top of that, right?
Right. Yeah. It could be, 2% plus 25 cents, and so
Right, right.
if your transaction sizes are smaller, that 25 cents could be a meaningful percentage.
Exactly. And so for something like this, it's a way to the merchants benefit. The consumers don't benefit as much. It's something we talked about because of Jack Maller's announcement at the Bitcoin conference back in April, where savings to merchants are going to catch on. Also, in this poll, they said that the biggest hindrance was the point of sale terminals, like getting that alternative payment method in some kind of point of sale system, which we're seeing is rapidly improving.
Well, I have an answer to that, which is that go back, I don't know, 3 or 4 years and go to any store, and what percentage of the credit card machines allowed you to tap your phone or your credit card on the credit card machine, and compare that to the percentage now that allow you to do that.
Yeah, I would agree, and that was big. Those were big companies pushing. I mean, Apple has been pushing Apple Pay for I'm not sure how many years. It's got to be 5 or 6 years now. Got to be something close to that.
Yeah, but it's only been in probably the past couple of years where all the credit cards now have contactless,
Right.
chips on them and all of that stuff, where
Mm,
you're actually able to use that technology. The point being that in order to do that, you had to actually change the software and in some cases the hardware of the terminal machines. And that happened pretty quickly. I don't think
mm,
I don't see that as a huge barrier. I think if there's, the push to be able to accept um, Bitcoin as a payment method, and you can connect to those rails, whether that's over Lightning or whatever. I think it can get rolled out relatively quickly. We've seen it happen with other things in that you know terminal payment
mhm.
processing space.
Well, that terminal appears to be changing rather rapidly. I'm noticing a lot of new terminals out and about. I'm noticing these kind of slimmer terminals, anything that's done by Square. And I'm certainly no expert in these things, but I am seeing more and more of the touchless or the tap to pay terminals. So I think that we're certainly heading into some challenging economic times ahead, and as we've said before in other episodes, if there's a way to get value from your customers or a way to get customers to buy your product who normally would not be buying it because of a lack of discretionary income, tapping into we're going to call it the crypto world, I can see that being significantly beneficial. And it's beneficial both in terms of revenue for the merchants and in terms of cost savings for the merchants. And that's that famous quote by can't believe I just blanked on his name, Warren Buffett. Show me the incentives, and I'll show you the outcomes.
Yep.
Mm-hmm. So certainly a lot of incentives there for merchants, without a doubt.
Absolutely. All right, and then let's go to our last one here. Seems like we always have something in the soccer world with Bitcoin or crypto, and so the OKX exchange is becoming the sponsor of the Man City training kit.
Yeah. So to get an understanding of just how crazy people are about this and what a big deal it is, OKX, I believe, paid $20 million to have their name on the training kit, not the kit they're going to wear during the game.
The one they wear before the game or at training. Right?
Well, they will wear it. They probably will wear it on the field before the game a
Before the
bit,
game. Right?
but they will buy it. And Manchester City has won the Premier League in England for the last 5 years, and their fan base is nothing that we could really conceive of in this country. It's just they're maniacs, and $20 million is a lot of money to be on a training jersey. And I'm not sure how long that contract is for. I wasn't able to tell if it was a multi-year or not, but
Mm-hmm.
given the sums that I've seen in that sport, I would not be surprised if it was 20 million just for 1 year. I and while I like to see things being adopted, I don't think that Manchester City really cared that it was a crypto exchange or what the business was behind it. They wanted to make sure, I'm sure there was very little reputational risk to Man City,
Right.
but as long as someone's willing to stroke a $20 million check, I don't think they really cared that much. But I think the bigger part of this is brand awareness for the rest of the world. And what I mean by that is that while soccer is not very big in the US, although it is growing very rapidly, uh, it is everything to people in a lot of these countries. And so
Mm-hmm.
you're talking about, a team like Manchester City having this. That's exposure. I'm just going to say it's exposure to a minimum of 1 billion people. If I'm
So
wrong,
that's
don't put in the comments, tell me, I'm crazy about that. But I think it's exposure to a minimum of 1 billion people. And we're also going to see some sponsorship at the World Cup later this year. I forgot who is going to be a sponsor for that, but I I I think that when you talk about like awareness and changing the mindset of people, there might not be a better way to spread the message around the world than on soccer jerseys.
Yeah, well, and look, I think one of the things that um, took me a little bit to understand living in the U.S. and I mean soccer for most people in the U.S. Soccer is a sport that kids play until they're around 10 years old for most
Mhm.
people, and in the U.S. We have American football, we have baseball, we have basketball, we have the NHL, we have lots of sports, and they're all taken pretty seriously, and they're all very big business. And in most of these countries, it's just soccer. There's no other sport really. I mean, yeah, sure, and in parts of Europe, you might have some rugby or other sports, but for the most part, the the sport that people watch around the world um, is soccer. And just because it's not as big here, we can't forget that it's just huge around the world. And so when you see people paying millions of dollars to put their, cryptocurrency exchange logo on a jersey, or when you see the ability to buy tickets using Bitcoin, all of those things are exposing a tremendous number of people to that.
I agree. It's really quite remarkable exposure. Really, really remarkable. And not only that, but do you know how many of these jerseys they're going to sell?
Oh,
And I mean, Man City is like a worldwide brand. I don't know how many people are going to buy their training jerseys, but it's significant. I mean, the amount of jerseys they sell. I saw a stat one time for one of the big teams, and it's just like this mind blowing number of how much they sell, how much they make in merchandise, and how many jerseys they sell. And I think I like to see it. I don't really think I'm not giving Man City credit for any kind of Bitcoin adoption, but I'm happy for them to put this advertisement on their jerseys and have, you know, hundreds of millions, if not billion plus people see it. And I think it's
well,
one of those things where, we kind of talked about this before. It's one of those things where you just realize that crypto, as much as we don't really talk about crypto and we really Bitcoin focus, but crypto is kind of here to stay. Even when there is, even when Bitcoin dominates the monetary system. Let's assume that Bitcoin really dominates the monetary system, and it becomes, oh, I don't know, let's just say they price oil in Bitcoin, something crazy like that. You're still going to have these altcoins. There'll still be other things there. There'll be people that are making NFTs and smart contracts, whatever people want to do on alternative blockchains. That's fine. But I think that concept of crypto is rapidly becoming just part of the world we live in. It's no longer this unusual thing. We're seeing governments scramble to try and figure out what to do because they're, as always, kind of typically behind. But in fairness to the governments, I mean, who knows what to do with this new technology that's rapidly emerging. And now we're seeing, Man City has won the Premier League 4 of the last 5 years. So they
right.
are
So,
just a monster team.
yeah. And so what I was going to say is that you have to assume that they're not just putting anyone's logo on any of their official kits. Um, for the non-soccer fan listeners in America, the kit is the uniform. Um, the They're not just going to say, "Oh, these guys want to give us 20 million so we can put their name on our jerseys." They're gonna do some due diligence. They're
Well,
and
well,
so
yeah, I have to kind of stop you there because, in fairness, they will put a lot of like betting. You'll see a lot of them have like a betting houses. I don't know what you call them, but like
sure, gambling
sportsbet.io
sites.
on
Yeah.
gambling sites on their jersey. So they're
Well, no,
not.
no, I wasn't saying from like a moral standpoint or anything like that. My point being that they have to make sure, first of all, they got to make sure that whoever it is has the 20 million, and that they're not putting, and this could be complete speculation, but let's just take Voyager as an example.
Mhm.
Is Voyager going to be on a Premier League soccer jersey when there's news stories all over the place that they, are about to go out of business because their biggest borrower defaulted on their loan? And so, meaning that I think that it's somewhere in between. I'm not saying that there's a huge filter on who they will put on their jersey, but in order for them to accept that sponsorship, they're going to need to have some comfort that it's not a business that's going to be out of business tomorrow, because that would not go well for them either. So the point being that there is some kind of collective understanding that these are businesses that are going to be around. The industry, at least, is going to be around. So I think that it's just, one other indicator that it's just something that isn't going away.
I agree. Just another data point that just shows, how the world is changing. And a lot of times it changes, you just don't realize it. You don't kind of stop to look around and see what's happening. And that's one of the things we're trying to highlight for people is to bring the best stories of the week and to try to help people get a sense of what does the future look like. Not that we know, but you can put together enough data points to make a better guess. And that's all we can ever do is put together the best guess that we can.
Yeah, and to use that information to kind of get a sense of where things are going and what trends we're seeing, and what are the major points that are leading towards more mass adoption.
Agreed.
All
Anything
right,
else, Matt?
not for me.
All right, great. Then can you tell people where they can find us, please?
Yeah, I was going to say that you did say something that I don't think we've said before in our closing, when we talk about where to find us, is that if you have a story that you'd like to hear us talk about, or if you come across something, please send us an email or DM on Twitter. You can find us at our website, btcbutlers.com, at btcbutlers on Twitter. You can email us info@btcbutlers.com. You should subscribe on YouTube, like us, comment, listen on whatever podcast platform is your choice. And we appreciate the support and hope to hear from you. And we'll see you next time.
Thank you, Matt.
Thank you. Bye.